So, hello, and a massive hello to everybody. Hope everybody's having a great day, great weekend, wherever you are, whatever you may be doing. This is 50 Pips rocking and rolling here, 16th of December, 2018. No trade calls, recommendations, or response for their own stuff. So, we're here heading into the last full trading week of the year. Still an awful lot of headline risk, Brexit, China, tariff wars, stuff out of Washington with Cohen, Mueller, etc. Europe, Saudis, there's an awful lot of event risk. But really, what matters this last week is the FOMC. It's all and only about the FOMC. I mean, we do have a very interesting week with an awful lot of data. We've also have the BOJ, the BOE, but again, it's about the FOMC. Keep in mind that going into this December triple witching week, this is actually a fairly bullish week seasonally, historically. So a lot of people will still be looking at running strategies or trying to get long this week. A lot of people will still be looking, they've been looking since the beginning of December, but they'll be looking for this Santa rally to start. It's getting a bit late, but still, seasonally, historically, it's a bullish week. We'll have to see how it trades. Very, very big event risk here with the FOMC. As far as for all the subs confirmed here, the votes came in on the email. So what we're going to do is between Christmas and New Year's, instead of doing a big or long video for next year, what I'm going to do is I'm going to try and send out each day a different short video, try and keep them short around the 5, 7, 8 minute mark. And we'll tackle, euro, cable, yen, commodity currencies, stocks, etc. We'll do gold, we'll do them all. So going into this week, let's start with equities. We're right back into those lows, and no big surprise to us, right? Because we've been holding short exposure, and our base case is still that we have unfinished business at the yearly lows. So this is trading on plan for us. Very, very heavy. We'll have to see how this trades at the beginning of the week. SPX here. We would really not be surprised to see these lows taken out, a very aggressive test back of the yearly lows. If we close below there, we would not be surprised to see those 2430s get tagged fairly quickly. But right now, we just have to keep in mind that it's going to be very choppy inside that range. On an ugly break, the easiest thing is to flip to a weekly, and what you'll see, the key focus will be that 200 weekly moving average that is coming in play right at this target, and that would be the place where you on an ugly place break, you would expect it to bounce there. If it doesn't bounce there, then game on for our move back into election night, right? But right now, that can't be the base case assumption. The base case assumption is that we still have to retest those lows, and it's all going to be about the Fed. Now, don't be surprised. I think it's really important. Don't be surprised to see if you actually see, as far as we're concerned, this could even rally very aggressively, and we could see something like a 5 or 6% rally right off these lows. You never know on the Fed. You could see a very aggressive rally. As far as we're concerned, that is still a sell, because ultimately, it might not come this year, it might come into next year. We expect this whole series of lower highs to hold, and ultimately for us to break down lower. So we still think it's heavy. The FOMC is going to be a tough one, right? Because people can look, you can look at it both ways, because essentially our base case is still that they're going to raise rates, and this is probably going to be the final time, because they don't want to really surprise the market that it's too late to try and backtrack. So we'd expect them to raise and then maybe be a little bit more dovish. Now the big question is, are they going to hike and then be dovish or not? Now, you could really argue for both cases. Now, the most common assumption here is that they're going to raise and be dovish. But you could argue that if they're dovish, basically they're not going to continue to raise. The market can take that as a go-ahead green light to rally hard. But, essentially, if they pause, that probably means that, because they're data dependent, they don't feel too good about the way the economy is looking. So you could look at it and say, so maybe what we've been talking about here, what 50 has been talking about for a while, that it's as good as it gets, stuff has peaked. Well, then maybe it's not a great idea to try and buy stocks. So again, as we always say, you wouldn't know, nobody would know what to do with the data if you had it ahead of time, right? Best thing is think of what happened on the Trump election. So the best thing is to focus on the levels, right? We're still short, we're still bearish, and any kind of rally that doesn't take out this whole series of lower highs for us is still a selling opportunity for this ultimately to the resolve to the downside. Remember, it doesn't have to resolve this week, but the way it's trading, you would expect these lows to get taken out ahead of the Fed, and then it's going to be game on. But really, we feel there's unfinished business further down. Now, it's the same thing as we've been discussing on the NASDAQ. So no change on the NASDAQ. Our base case and what we're playing for, our money is where our mouth is positioned here is for us to finish this symmetrical move, and that'd be the first attempt to try and take out those highs. Then we expect to get some kind of a bounce, and then for us to conclude there. Should we get a very ugly move, again, the easiest thing to get a feel for context is flip on the weekly with that 200. In our base case, again, I'm not going to go through all the discussion on NASDAQ, but the unwind on NASDAQ, if it gets ugly, what we've been discussing is a move all the way, oops, I did not want to do that, a move all the way back down into these 550s, 5,000, so 5,550, 5,000 mark. This is where we would be looking for. So again, still not we don't expect that to happen straight away, but that's something that's on our radar. Now, the other thing which we've been talking about is if you're trying to get a feel for how we're trading, right? Just keep a look at the financials, right? Look at XLF. You can look at Goldman Sachs, and we were very early here. Remember, we're also talking about Goldman always knows. And this is extremely ugly chart, right? An extremely ugly chart. So as long as the financials don't get a bid, then there's really no reason for any bounce that may come in the market to be a sustained bounce, right? And look at it even here, right? This could really try and rally hard, and it could still be playing out this pattern ultimately for a move lower. But intraday, the easiest way to get a feel for it is keep an eye on how these are trading, because these weeks you've seen every time they've tried to bounce, the financials weren't bouncing at all. And the other thing which we've always talked about, right, and we look at is which is our first short on the equities, is the Russell, right? Keep an eye on the Russell too. The Russell's been leading to the downside, and it's already through, look at this. It's already through these lows, right? Is very, very ugly. This would have to put in one hell of a bounce for us to say, okay, this is looking bullish, because this could easily rally. Let's see if this is going to work. It's not going to work. Let's do it this way. This could easily rally off this level. This could easily come back, 7-8%. And this is still ultimately not looking pretty at all, okay? Not looking pretty at all. Now, what are the other things which we've been looking at? And again, this is similar to last week. It's a wait and see, because we've made our beds on a lot of these trades, right? The other thing to keep in mind is look at Asia, and there's no bounce in sight on Asia, right? Shanghai Comp, no bounce in sight. And the other thing is crude. A lot of people have been trying to catch this crude, and what we said is, right, essentially, as long as we don't get a weekly close back above that 200, we're not ready to try and pick a bottom on this yet. So we'll have to wait and see here. Ultimately, this is probably what may be the tell, right, in terms of what the FOMC or the Fed ends up doing, right, in terms of crude, right? This might be the real tell, right? Whether we can bounce or whether this really pukes, and we'll talk about this in detail. But right now, no big change. As long as we can't catch a bid back above that 200, no reason for us to try and get long here. And the other one remains the dollar index, right? We think we wouldn't be reading too much into recent action, because essentially nothing's happened, right? It's all about this Fed. And right here, as long as we don't get a daily or a weekly close back above this 98 or back above or below, sorry, the 96, there's no real reason to not continue to assume that this will be a sideways chop pattern until it decides it wants to resolve, right? But also, it is not uncommon for us to rally into this Fed decision. It's not uncommon for us to see dollar strength going into a decision where everybody in the market is expecting the rates to be hiked, right? It's normal. This is what you would be expecting to see. Now, the base case assumption is, especially if we get a dovish statement or if they cool down their expectations a lot, the only thing you could expect really is, since the market is still overwhelmingly long dollars, right, and positioned for more hikes, if we rally all the way into the announcement, we get the last hike, and then it's dovish, well, then the only, and again, markets rarely react in a logical fashion, but what you would expect is you would expect that to be an absolutely fantastic asymmetric risk reward to trade this to the short side, because that's just last one done. Then it's time to unwind these. So we're still short here, and we're still looking for these to play out that way, and we will not reassess or change our mind unless we have a day close above this. And if we do, I'll send out another video and we'll discuss. Okay, so our base case is still, as we've been discussing in these past weeks, is that this is going to continue and try and firm up and rally into the Fed this week, and then we'll see it sell off. So we'll have to see what happens. And again, not surprisingly, like, you can switch on all the time frames you want, and you can look at it whatever way, shape you want. You see, it's the same thing on the yen. It's going nowhere, right? It's just waiting. Similar thing, flip it on the weekly. It's not going anywhere. All these moving averages are just flatlining. We're just waiting for the Fed. That's the only show in town, right? So it's all and only about the Fed. Really, ultimately, don't expect too much out of the BOJ. It's really all about the Fed. Are we going to see the DXY, the dollar, catch a bid following a hike and more hawkish discussions? Or is it going to be a buy the rumor, sell the news? Once it actually comes out, it's hike and done. That's the only thing that matters. And that's going to be exactly the same thing on Euro USD, where you see it's going nowhere on the weekly and it's going nowhere on the daily. It's just waiting. Now, the normal misconception is to try and read too much into what happens preceding these announcements, especially when we're at extremes, because it's very easy, to take out stops left, right, and center inside that range, because especially even, and we've discussed this, right? If you're looking at the 114 and this, 113 mark, what kind of size is going to want to be trading inside this zone, right? What kind of size is going to have any kind of stops inside this zone? This is just twilight zone trading, right? Small retail territory, fortune seeker, Instagram fortune seeker territory, right? Size is likely weighting higher and lower, right? Whether it's to buy or to sell, or whether it's to buy or to sell. That's what you really have to keep in mind. That's where the size is, whether it's to fade or press to the downside, press or fade, or whether it is to press or to fade. That's where it gets interesting. Not in the middle here between 114 and 113. That's just, nothing's going on. So don't try and read too much into it. Just wait. It'll be fairly and extremely clear what's going on once the move starts to take place. And these are nice locations because this is where there's stuff to do, right? Whether it's a complete break or it's a pop, there's stuff to do. These are areas where you can be active, and usually you can be active with very tight risk on the trades, because it tends to be fairly clear once it plays out, once we get the announcement. So again, going into this week, it's all about the Fed. It's just be patient. The key thing is to learn to pace yourself. The key thing is, as you're going into the week, don't be in a hurry to trade. Don't be in a hurry to put on positions. Remember, the opportunities tend to be at the extremes, and especially when you're in the lull before a big event, right? There's very little edge in trying to be aggressive. Also, in terms of expectation, right? You can't come into this week expecting, unless you get a super headline hit, you can't come into the week expecting Monday to be a 4, 3, 2, 100, 200, 300 pip move on yen or on euro, just on it being a dollar move. The only reason you're likely going to get big move is probably on yen if equities really puke or do something. But essentially, you would expect Forex, especially DXY, to be relatively range bound, waiting for that FOMC decision. So as always, we're going to pace ourselves. We're going to wait and see what happens. If you have some trades on, you have them on. You tend to be in what we call close only mode, right, on existing positions into the Wednesday, and then from the Wednesday, Thursday, that's where you're looking to put some stuff back on. But again, keeping in mind that the year's coming to an end, but we'll also discuss that in another video. Okay, guys, have an awesome one. Talk to you guys soon. Thanks for flying with 50. Have an awesome one. Bye bye, guys.